everybody. Stephen Mead here with Domicile Real Estate for people who love houses. And we're with you this week for our weekly Southern California housing market update. And just a reminder, for us, the Southern California market, we run our stats on Los Angeles and Orange counties. So if you're in the Los Angeles, Orange counties area, then this is the right market update for you. Even if you're outside this area, there's probably a decent amount of carryover all throughout Southern California. Before we begin, two things. One, we're not live streaming this today. Zoom just does not feel like live streaming right now. It gives us 404 errors and just refuses to work. They just did an update of Zoom, so I have a feeling it might be related to a bug that they have not fixed. The second thing I want to talk about, and if you're on YouTube, there'll be a link in the description, and that is to a new video series that we started doing that is just an update, and it's a bit shorter for first-time home buyers. So really, we're kind of focusing on that segment of the market. And we have some unique stats around both affordability and availability of housing that really kind of zero in on things that are important to first-time home buyers. So if you're looking for something like that in particular, I highly recommend that you take a look at that. If you're seeing this on Facebook, it is also on our company Facebook page as well. We post those videos up. So expect us to do those. I think we're going to get in the habit of doing those on Friday mornings. Our first one was done on Saturday, this past Saturday, so definitely check that out. Now, I want to go ahead and begin with something else too that's important this week, and that is this week is a little bit of an end of an era. One of the things that's very important to me is this idea that when we're looking at this data, we're sort of kind of constantly evaluating the stats we use and whether these are giving us the information that we want, whether we're presenting this information in the right way or the clearest way. And I think there's kind of a continual process of refinement. So next week is going to bring a rather large change to some of the graphs that we use and some of the statistics, which might seem a bit upending, but I will kind of go through those next week and talk about why we're changing some of those things and why we're doing things a little bit differently. So, this week is a bit of the end of an era. And let's go ahead and begin and kind of run through what's happening. So as you're accustomed to, it's kind of our first slide is this sort of new listings. And I always tell people what we're really trying to do here is measure supply. That's what new listings are. This is the houses that come on the market in the past week, like ones that were input and entered into the MLS. And if we take a look here in our under 1 million and over 1 million or $1 to $2 million categories, I apologize again that it's faint. That's one of the reasons why we're changing things. We're just really struggling to really break that 2,000 mark. And what's interesting about that is in past years, there very much have been weeks where there have been more than 2,000 listings going in. As you can also see here, even in our 1 to 2 million, we've recovered a little bit, but we're just not really seeing big listing numbers. And that's really been the hallmark of 2020 is while demand has also been up and down, the listings, they just never really gotten to a level. And now we're going into September, into the fall. They've just never really gotten to that level of tons of people putting their houses on the market. Now, I want to talk a little bit about this graph. And, this might lead you to believe that what I just said is wrong. If you notice, this week we had almost 1,900 new listings on the market. And in 2019, only 1,653. And you might be thinking, wow, Stephen, you just told us that listings just really aren't catching up. Well, there's one really important thing to remember when you are looking at this chart. And that is last year in 2019, Labor Day was September 2nd. So that meant this week, this same week of dates, August 25th through August 31st, that same week included Labor Day weekend in 2019. Holiday weekends are really interesting. I'll go off screen share for a second. Holiday weekends are really interesting because while we tend to see reduced numbers sort of across the board on holiday weekends, they tend to hurt listings more than they hurt purchase contracts, especially in a crowded market. Like right now, there's not a lot of inventory. If you want a house, like I'd imagine our sales will still be pretty decent when we look through next weekend's information, which includes our Labor Day weekend in 2020. But listings, nobody wants to start their listing on a holiday weekend like that. Nobody wants to launch on the Friday that everybody's going to the river. So bear that in mind when you look at these stats, that sometimes these holiday weekends really do play a very, very big part in sort of what we have going on. They play a very big part in our stats. So if we go through our new escrows, you know, again, these numbers look like they're stalling out a little bit. I don't think they are, because remember, our new listings went down also. If we're looking at our under 1 million, we're kind of flat versus last week, like pretty close. We dropped a little bit in our 1 to 2 million range. And we're going to see in a second how that actually has affected our absorption numbers, which is kind of an important statistic. Now, if we compare this to last year, yeah, again, we do have higher numbers than last year on our new escrows, but not as big of a disparity as we saw on the listing side. And again, that's just because, you know, when you think about a holiday weekend in an impacted market, people are still buying houses because they want to do deals, they want to get houses, but sellers are a lot more reticent to put their house on the market. And now we kind of go to our reconciliation of supply and demand. You know, we're looking at this absorption figure, and you know, just to give you an idea, I mean, we're still in our under 1 million category. We are still above 80%. We're well into the 80s, into the low 80s, and I mean that just indicates, you know, people are pretty much buying whatever comes on the market, and I think that's really just important to understand that that's what kind of market that we're in. We're in a market where I believe the phrase is beggars can't be choosers. And, you know, we're just very much inventory constricted. You know, there aren't a lot of houses that are great houses at a right price that are sitting on the market. Like, we're just not seeing that. If a house is sitting, it's one of two reasons. You know, it's either way overpriced, or, you know, the home is just extremely unattractive or unsuitable. Like, you know, it's halfway burned down, it's not lendable. I mean, we're talking extreme cases like that. You know, even the ugly houses are getting multiple bids if they're kind of in a great neighborhood and at a good price. So, you know, our absorption rates are still very strong. If we go here, 1 to 2 million, yes, it's down versus last week, but, you know, still hovering around 70% for kind of this luxury market. That's still a very strong showing in that market as well. If we go to our average pending list price, you know, not to spoil next week's surprise, but we're kind of revamping this statistic. And I'm going to go off a screen share here because there's a couple of points that I want to make here on why we're doing this. The first point is, you know, one of the reasons why we use a pending average list price is this. Our system does not show what price a home is in escrow. Meaning, if I asked $900,000, but we got multiple bids and we are actually in escrow at $1 million, there is nowhere in the MLS that shows that information. The only time that $1 million price becomes public is when the property actually closes. Now, there's a problem with using data when properties actually close, and I haven't harped on this in a while, but someone was just harping on me about a price statistic. The problem with sale price data is not that it's inaccurate. In fact, it's very accurate. The problem is that it's old. By the time I see a sale price close, that's the result of negotiations and a market that was 30 to 45 days ago. And unfortunately, that's like telling me where the train was 10 minutes ago. That doesn't help me very much. I need to know where the train is right now, and I need to know what direction the train is heading. That's, if I'm a buyer or a seller and I'm trying to make decisions, that's the information I need. I think, you know, that the sale price data is sort of a great confirmation of where you right or where you wrong about those things. So one of the problems, though, that we found with this pending average list price is that this number bounces around a little bit more than we would like. The other problem with this is, you know, when we divide it like we do, and you'll notice, you know, our whole point here on dividing these stats is into under $1 million, and I'm gonna highlight that for you guys. We divide this into under 1 million and 1 to 2 million, and the reason why we've done that in the past was to sort of give an idea of two ends of the market. And, you know, because I do think that, while in a super red hot market, you oftentimes see the luxury and the more normal price markets go together, but that isn't always true. And sometimes you see sort of divergent data. The problem that we have with that is I think that's having an effect on sort of skewing this data a little bit. And I'll talk about that a bit more next week when we sort of introduce our new statistic and why we're doing it. I might even make a little behind the scenes video that really kind of nerds out a bit for people that want to see the nerdiness. Again, you still see we've got this gentle incline. It's starting to get a little wilder at this end. You know, and I think that's indicative of a market that is getting a little unreliable for two reasons. One is that we're seeing that sellers increasingly are not knowing where to price their homes, or we're finding that neighborhoods and areas get hot, or a particular feature gets hot. Like right now, properties with accessory dwelling units are doing better than anybody expected. They really shouldn't be because of COVID-19, but you know, previously, I would say the value of an ADU is way higher now than it was 6 months ago, for example, on a property. So because of that difference, it means we're seeing the pending sales price go up, and I'll have this stat for you guys next week, this chart, but we're seeing the actual closed sales rising faster than the pending list price, and it's kind of lagging behind. So I think we've got a few data issues, and I really want to get a better statistic of the question I want to answer with the statistic is, this past week, are prices going up, staying the same, or are they going down? Like, that's the question I want to answer. I don't want to know about a month ago when everybody negotiated the deals that are now closing. I want to know this past week, what's happening to prices and how can we measure that? So we're going to be introducing sort of a new chart to sort of track that price data and to try to give people a good idea on what is happening. So let me jump back in here real quick. And if we go to this list to close ratio, this one is always an interesting chart to me because this isn't about how hot the market is. What this chart is about measuring the difference between seller and listing agent expectations and where the market is. So when you see that number going up, it means the market is moving faster than sellers are realizing and going in an upward direction. When you see this chart start dropping down, it means sort of the opposite's happening. I mean, I would almost admit if your list to close ratio is like 95%, that actually means you're chasing a market downward at that point, right? So, you know, we see things kind of leveled out. They jumped a little bit. Now they're back down. I'm curious what's going to happen in the next week. But what this tells me is it tells me that, you know what, the word is out. Sellers are realizing that their house may be worth more than the comps would indicate, and they're pricing a bit higher to try to take advantage of that. That's what this graph is telling me is happening. So finally, the message is getting there. Maybe we'll see an increase in listings to show that too, but I'm not holding my breath. I know I've been saying that for weeks, months, it seems like, and you know, the listings just don't really seem to be showing up. If we look at our over $1 million or $1 to $2 million range, you know, we see kind of the same thing, right? Like the line is a little gentler. I think part of that's scaling on the part of our chart here. But I mean, we obviously started down here in one direction and we've now ended up over here. So we are seeing a general sort of trend of price increases. That's not really a surprise to anybody. If we kind of look at our days on market, I think this statistic is really kind of telling. And you know, I've told you guys this, that days on market is really sort of a confirmatory statistic. It's telling you, you know, is supply constricted? Are the homes just going super quickly and flying off the shelves? Are we in an increasing high temperature market? And so, you know, in that context, and that's the question we're asking, this is the answer. And I don't have a text label on these, but I wish I did. We're down to, in our under 1 million category, we're down to 24 days is our days on market for new escrows. And that doesn't mean on average it takes 24 days for a property to go under contract. It's actually quite a bit shorter than that because a lot of agents don't change their status. They don't change their status to pending until they have contingencies removed, and that day market keeps accruing. So this is skewed upwards a bit, but I want you to look at the shape of this chart. This chart tells me that we are supply constricted. It means that it means we'd sell a lot more houses. We'd have a lot more new escrows if we had a lot more new listings to be on the market, is what this graph tells me, because the market can really absorb a lot more. And we see a similar trend, admittedly not quite as dramatic, but even in the $1 to $2 million range. I mean, this is very, very short marketing time. Typical marketing time in a quote unquote, I'm going to do air quotes, and I want everybody to see this, typical market. And what I'm going to tell you is there isn't really a typical market anymore. I think we're just going to call that market of the past. In the market of the past, 30 to 60 days was more of a statistic we'd see, or 60 to 90 even in under $1 million. That was kind of the range that we'd see on most properties for that statistic. What we wouldn't be seeing was 20 some days. That's just nuts, and it indicates there's just not enough houses to sell. Now, finally, we're going to go to something where we've seen kind of a big piece of movement, and I don't think it's noise. I think this is a trend that is happening. So this is the payment on a median priced home, right? So what we did is we took the median priced home in Orange County, and that's single family and condos. We take that data and we compare it with the prevailing interest rate of the time. And we kind of came up with a baseline for about 2 years ago, June of 2018. And you'll see things track downward. And, May, June, July even, we were down almost 10% from that number. And then what happened? First week in August, it bumped up. And this past week, we kind of hit a new high. We haven't seen this since last year. And that is over 95%. And I'm going to go off here on a second, and this makes me think of a chart I'd like to have in the future for you guys. That statistic really, and there's two things that move that statistic, right? Like, so there are two things that change it. Interest rates, if interest rates go down, they make, even if prices stay the same, payments drop, right? Everybody knows this. The other thing that changes things is the median price home, right? And I will tell you, this past week, mortgage rates dropped, and yet the payment jumped. The only way that happens is if median price is jumping, and it is jumping. This isn't news to anybody. I've told people it's a red hot market. If you're in the market, it's a red hot market. And now we're finally starting to see some of those prices come in that are confirming what we all knew about 30 to 60 days ago. Anyhow, thank you guys so much for watching. As always, we love questions. We love comments. Sorry, there's no live stream again this week. Unfortunately, Facebook or Zoom, one or the other, just didn't feel like working for us. And again, just a reminder, definitely check out. It's coming out Friday morning. We're going to do our special market update just for first-time home buyers, where we go over both affordability and track that, as well as availability of housing, specifically in first-time home buyer price ranges and configurations in Southern California. Anyhow, thanks so much, and we will see you next week, or hopefully you will be tuning in this Friday.